Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 20th of March, 2017, about 3:30 p.m. Central Daylight Time. You know, an interesting day. Why? We watched today the House Intelligence Committee, and if you looked at it, I think President Trump had a bad day. I mean, they saw no evidence of wiretapping. They are looking in, according to the FBI, the Trump campaign and Russia. They have not given up on that. They didn't say they have found anything wrong. They didn't say much of anything other than they're looking into it. These are not the things that I thought that our president was hoping to get out of this. I think he was thinking the opposite, yet the stock market just shrugging it off. You know what it's saying? It's political noise. Let them all have a good time. But he's getting jobs done. He's got the health care. He's trying to, if you will, negotiate a better deal. And the market likes what it sees. You can't get away from that. You can't get away from the fact that the gold went up on a bid on the information as well as silver did. The dollar, pretty much unchanged on the day. Same in the euro. The pound a bit lower. They announced Brexit. The Brexit date is March 29th. That Miss May will deliver the Article 50 to the EU, and that starts the two-year period, whether they get treaties done or not. 2 years from that date, they're out of the EU, and all their obligations to the EU end at that point in time. But when we look at the gold chart, I see on a weekly basis a bunch of nothing. I have a market that made higher highs and did very well. Then when it broke back 2 weeks ago, got under these important lows. Last week we had a bounce, and we're starting off this week with a bit of a higher high than we had then. But we don't have a pattern here. What we have is a market that's over the 100-day average, which is over the, I'm sorry, did I say 100-day? 100-week average of closes that is over the 18-week. Now, I could get bullish this market. Real simple, if the 18-week eventually gets back over the 100 and prices stay over both. But right here, should prices drop down, what happens is you join the bear camp real fast if you close under 1194.50, because then prices would be under the 18-week, which is under the 100-week. So you're at a very important zone, one where base building is being attempted, but that can turn into a top if the market were to fall apart there. When we come to a daily area chart, now we're onto the daily charts, all I'm looking at here are closes. And the lowest recent close we had was 1200.7. We've recently gotten up to 1234. That is today. So the market's still acting in an up-thrust mode, as I call it. When we come to a daily bar chart, and this is just a bar chart of each day, so each bar represents a full day of trading, the high, the low. I even put on, in some of them, the open, which you have on here, and the closing prices. And then I put the swing line on with it. And the pattern is one where these apexes, you've got higher lows, higher highs. That's bullish. Until you take out 1224, I contend the pros are now buying this market because prices are also over the 18-day moving average of closes. And that is over the 100-day. So I have a bullish picture until 1224 is taken out. Where might the market go? Well, if it does go further, a possibility might be the upper Bollinger Band at 1267.60. It's fairly far away right now, so I'd probably be looking at window envelopes as well, but that is a possibility. So the key in the market is what? One simple key. Don't take out 1224. Momentum is pointing up and it's not overbought. So if momentum leads price, you still have a good-looking market here. I'm looking for support against 1227. In the gold ETF, I have a pattern of higher lows, higher highs, over the 18-day average of closes in red, which is over the 100, and momentum's pointing up. Still friendly there. The gold miners are not in this camp, but they're also not in the bear camp. The market has a pattern of lower highs, see the apexes, and clearly lower lows, right? Then we come up, and now we're starting to get a pattern that you could argue you got a low here and a low here if you can take out 123.45. I'm sorry, 23.45. I looked at the arrow and I put a 1 on it. 23.45. That would then give me a pattern of higher lows and higher highs. You need to do something here. Close under 22.51, get bearish again. Get over 23.45, you're bullish. So those are the parameters as I'm seeing them. The gold-silver ratio on a daily basis is now, it wasn't an up thrust. Now I want you to look at this. This move is now down low enough there where I can change this, and I'll change it for you tomorrow to a down thrust. And until you're back over this number, 70.99, the market's got a pattern of a higher high and a lower low, but the last event was a lower low. So I'll get rid of this number. I'll put it right over where Friday was, and I'll put the arrows pointing down. That's how I work with it. On the silver chart, I have a chart pattern that in the swing line is bullish. I've got higher lows, higher highs. Until you take out 17.23, it looks good. Momentum-wise, you lost an embedded reading. Now, let me just show you. This is Friday's action when you lost it. And if you come back to Thursday, see how both numbers were just saying under 20 together? You lose it, and if you lose it again the next day, you can't get it back. It has to go through the whole process again of another 3 days to under, and you'd have to have a big break to begin that process right now. So support, the 100-day average, resistance, 1761, but no trend per se. You have a trend in the swing line, but you got downside bias because you're under the 18-day average. The two fight each other, you got nothing, and this market's in oversold condition. I'd give it more of an edge to the upside, but nothing that's very convincing. In SLV, it's the same thing. You've lost the embedded reading. Now, when you lose the embedded reading, just the way you did in the silver futures, often, I cannot use the word always. I can use the word often, which is the proper grammar on this. Price in the 18-day average quickly attempt to get back to each other. If it's a labored process, it just gets up there and sort of dies on its weight. So we want to see what just sort of happens here. The copper market's interesting. If we look at today's high, we have 270, and we go to the highs back here on Thursday. They were 269.65. So we had an outside day down. But that's going to give you a higher high and a lower low when I straighten this out for you. And there's nothing on it. There is no trend. The bias is down, and momentum is just flat as can be. In the platinum, you have a pattern of higher lows, higher highs. But again, where are you? All you did is rally back into the 100-day average of closes after being under it. Should it extend the rally, the resistance becomes the 18-day average of closes. You've lost the embedded reading. So you had it down here. That means price and the 18-day average stand a real good chance of coming together very quickly. In the palladium market, this took over the bullish leadership of between it and platinum. Higher lows, higher highs. I see the possibility of getting to the upper Bollinger Band, but you are now in overbought territory. And once you get into that overbought territory, anything can happen. In the dollar index, you had several days where you were trading under. See that? Under the lower Bollinger Band, under the lower Bollinger Band. And on this day, you had finished just above it. 155 was the number. You finished 157.5. So you had 2 days under, and you got right back over it. It's a market that we call running the Bollinger Bands, and it's oversold. So I'm not saying it has to stay down and do anything there. I think on rallies back up between the 100-day average and the 18, you'll find a lot of resistance. I realize people keep talking about the strong dollar. I'm sorry, folks. I don't know where that strong dollar is. You were a lot higher back here, and you've been slipping, if you've done anything, most of the end of 2016 into 17. So I put it all together, and I try to figure out what to do with it. And you can get help with that with your Modern Trader magazine, a free one-year subscription from them through us. It's really with the kindness that they'll allow us to do it. And they told me they're stopping this on most of the other websites. in the stories for the month of April, platinum versus gold. Gee, staring us in the face. We're talking about that right now. How do you trade different chart patterns? But it's just this one. I mean, each issue's got different parts to it. And then they back it up with market focus. So whether you're trading stocks, options, derivatives of a different type, they cover the whole spectrum. Yes, individual stocks are covered here with trade ideas as well. And this is what the current magazine looks like. And you can see they were dealing with, excuse me, they were dealing with the current big IPO that came out about a week ago. But currency wars, where do you go? Look at all these different stories, the spin-offs, the ETFs, everything there. You know how you get all this? You can either go to our website at www.iraepstein.com. You'll see a carousel of free offers. You can click right up here if you're watching me on YouTube, because what's going to happen there is that symbol, that I, click it, a form will appear, and you can just fill out the form and away it goes. Underneath us it says click it on some of the websites or click here, a form will appear there too. I'm Ira. You have a good day and I'll see you tomorrow.